Are you all fine? Okay, students, in our last lecture, we were discussing about capital structure and finance cost of the organization. We have almost finished this chapter. Today, we are going to start with the general discussion of the preference shares, about which you already know. We have already understood the concept of the preference shares in regards to the capital structure of an organization. Preference shares are the kinds of the shares which are issued by the organization and are divided into two broad categories. Two broad categories of the preference shares are redeemable preference shares and irredeemable preference shares. Redeemable preference shares are those who are going to be redeemed or returned at the specific date which is going to be promised by the organization. When the organization is going to issue the redeemable preference shares, at that time it is going to promise its shareholders that at the specific date we are going to return you the amount of the shares which we have taken from you. This is the redeemable preference share. The meaning of redeemable is returnable. So we are going to return the amount of the shares which we have taken from our shareholders at the specific date which is going to be promised at the time of issuance of the shares. In the case of the redeemable preference shares, we do follow the accounting concept of substance over form, which means that we are going to give the priority to the economic substance of the transactions over to the legal form. So the legal form of the preference share is that of the share. It's share legally, but its substance is that of the loan. Because whenever we are promising to return the amount which we have taken, it is having the characteristic of loan, because shares are normally not going to be returned. So that is why we are going to categorize the redeemable preference shares as the loans to the organization. That is why you are not going to recognize your redeemable preference shares under the head of equity in the organization. Redeemable preference shares are not going to be recognized under the head of equity in your statement of financial position. Instead, we are going to recognize them as our long-term liability under the section of liabilities. On the other hand, the return which we have to give on the redeemable preference shares is going to be considered as the finance cost of the organization. We are not going to consider that return as the dividend of the organization. We are going to consider it as the finance cost of the organization. So whatever return, whatever dividend has to be paid on the redeemable preference shares is going to be recognized as the interest cost and will be recognized in your statement of profit or loss. Got it? So this is going to be the treatment of redeemable preference shares. Good morning, Mariam. I hope that you are fine here. हम लोगों ने already discuss कर लिया था preference share के बारे में. मैं generally discuss कर रही थी students के साथ. Preference shares हमें पता है दो तरह की categories होती हैं, redeemable और irredeemable preference shares. Redeemable preference shares को हम लोग ऑर्गेनाइजेशन की लाइबिलिटी कंसिडर करेंगे क्योंकि इसके अंदर कैरेक्टरिस्टिक है कि इसको हमने रिटर्न करना है एट द स्पेसिफिक डेट. तो इसलिए जो कि कॉस्ट हमें बियर करनी पड़ेगी इशुएंस ऑफ द redeemable preference shares, cost of that is the return cost is going to be considered as the interest cost. ठीक है, तो डिविडेंड जो होगा redeemable preference shares के ऊपर उसको आपने फाइनेंस कॉस्ट के अंदर लेके जाना है. Got it, students? In exam, they are going to test you regarding that. So when you are going to have the redeemable preference shares, what you have to keep in your mind that they will be considered as the liability of the organization, and the dividend which is going to be paid on them has to be considered as your interest cost and will be recognized in the SOPL. Because we have already understood that normally the dividend is not going to be treated under your SOPL. What is the only place where dividends does go? Statement of changes in equity. This is the only place where dividends does go. But the dividend which we have to pay on the redeemable preference shares has to be considered as the interest cost and will be recognized in your SOPL. So on the other hand, we have the other category of the preference shares, that is irredeemable preference shares. Irredeemable preference shares are going to be considered as the normal equity of the organization. We are going to recognize them under the head of equity in our SOFP, and the return which we are going to give on the irredeemable preference shares will be recognized as your dividend in your SOCIE, Statement of Changes in Equity. So irredeemable preference shares will be recognized as your normal equity, and the return on this equity will be considered as the dividend and will be recognized only in Statement of Changes in Equity. So this is what you need to recognize and establish in the case of the examination. So they say if preference shares are redeemable, they are treated as same as loan notes. They are recorded as a liability in the statement of financial position, and dividend payments are treated as the same as finance charge. Finance charge is interest cost. They say if the preference shares are irredeemable, the shareholding and associated dividends are treated exactly the same as ordinary shareholdings as explained above. My dear students, preference shares are going to have the priority over to the ordinary shares in the organization. Whenever the dividend has to be distributed, first, it is going to be given to the preference shareholders, then the turn of the ordinary shareholders is going to come. Now we are going to do one understanding related to this particular concept, and then we are going to move on. The requirement of the question, as you can see, they say, calculate the amounts shown in the Statement of Changes in Equity, SOCIE, and Statement of Financial Position in relation to the dividends for the year. So in regards to the dividends, which amounts you have to show in the Statement of Financial Position and in the Statement of Changes in Equity. So they say, Cracker, a limited liability entity, has share capital as follows. Ordinary share capital, 50 cents shares of 200,000. 50 cent is the nominal value of the shares. Got it? 50 cents is the nominal value of the shares. 8% irredeemable preference share capital, $50,000. 8% is the amount of dividend. Okay, with the preference shares, you are going to get the amount of the dividend, the rate of the dividend in this manner, whether redeemable or whether irredeemable. It is going to be shown in this manner. So when you have to calculate the dividends on the preference shares, it will be calculated in this percentage. They say Cracker pays an interim dividend, that is the dividend declared partway through the financial year. In the exam, they are not going to give you the detail. You must be able to establish that what is an interim dividend. Interim dividend is going to be paid during the year. Final dividend is going to be proposed at the end of the year and will be decided in the annual general meeting of the organization. So they say Cracker pays an interim dividend, a dividend declared partway through the financial year of 12.5 cents per share to its ordinary shareholders and pays the preference shareholders their dividend, although this is not mandatory. Before the year end, Cracker proposes a final dividend of 36.5 cents per share to its ordinary shareholders. How much dividend is going to be there, students? Can you tell me? The requirement of the question is to calculate the amounts shown in the Statement of Changes in Equity and Statement of Financial Position in relation to the dividends for the year. First, tell me that whether you recognize the dividend in your Statement of Financial Position or not. Do you recognize it in your SOFP? No. The only place of the dividend to be recognized is Statement of Changes in Equity. So with this statement only, you can select option B, because this is the only option in which they are telling that in SOFP, nil dividend is going to be recognized. But you must be sure about the concept as well. That is why you must be knowing that how much dividend we are going to take to the Statement of Changes in Equity. So let's see the scenario again. Tell me on which particular amount do you calculate the dividend? Market value of the shares? Issue price of the shares? No. Authorized share capital? No. We do calculate the dividend on the nominal value of the shares. Okay, please keep this thing in your mind that we do calculate the amount of the dividend on the nominal value or the par value of the shares. Got it? So they say ordinary share capital 50 cents shares, $200,000. So how many shares are going to be there? We have to calculate the number of the shares in order to calculate the dividend. Am I right? Yes, Samiha, is it? Look, they are telling us that Cracker pays an interim dividend of 12.5 cents per share. Is it? So we have to calculate the number of shares. So if the value of the shares is 200,000 and the nominal value is 50 cents each, how much number of shares are going to be there? How do we calculate? Yes, Mariam? How many number of shares are going to be there? Excellent. 400,000. Very good. It's 200,000 divided by 50 cents. 50 cents means $0.5. Students, it's very simple. Amount per share is equal to the total amount divided by number of shares. To rearrange this formula, you will be getting to know that how are you going to calculate the number of shares. Okay, look. Whenever we have to calculate any particular amount per share will be equal to the total amount divided by number of shares. Is it? So amount per share is how much? $0.5. 50 cents means $0.5. Total amount is how much? 200,000 divided by number of shares. So you can calculate the number of shares in this manner. Okay, so number of shares are, ordinary number of shares are 400,000. So how are you going to calculate the dividend on this? 12.5 cents per share. 12.5 cents means $0.125. 12.5 divided by 100. So $0.125. How much it is? This is going to be your first dividend. 50,000. 50,000. So the amount of the dividend which you have to pay on your ordinary shares has to be recognized in your statement of changes in equity. Then 8% irredeemable preference share capital is also there. The return which you are going to pay on your irredeemable preference share will be recognized as dividend or interest? Dividend. Excellent. If we are going to pay it on the redeemable preference shares, then it will be interest cost. So 8% on 50,000, $50,000 multiplied by 8%. How much it is? 4,000. Got it? So they say then Cracker pays an interim dividend of 12.5 cents per share. We have calculated to its ordinary shareholders and pays the preference shareholders their dividend, although this is not mandatory. Before the year end, Cracker proposes a final dividend. There is a third kind of the dividend as well. Final dividend of 36.5 cents per share to its ordinary shareholders. Are we going to recognize this type of the dividend? They say before the year end, Cracker proposes a final dividend of 36.5 cents per share to its ordinary shareholders. No, we are not going to recognize this dividend because it is only proposed. Only the suggestion regarding this has been given by the directors of the company. It has to be approved in the AGM by the shareholders of the company. The dividend is going to be recognized only when it is going to be paid in actual. In the next year, when it is going to be finalized, when it is going to be finalized by the shareholders of the organization, when it is going to be paid, then it is going to be recognized in our statement of changes in equity. So this is also going to be tested in your exam. They ask you, they tell you that the proposed final dividend is this much amount. Are you going to recognize it or not? So obviously you are not going to recognize. When it is going to be finalized only, then you are going to recognize it. Clear? So the total amount of the dividend is 54,000. So option B is the right one. Mariam, samajh aayi bete?
Yes, ma'am.
Okay. Is everyone cleared? Now, students, within this chapter, they have discussed the concept of the income tax, but okay, let's have a look at the other reserves as well. We have already discussed this also, but let's have a quick overview. What are reserves of the organization? All the accumulated profit is not going to be given as the dividend to the shareholders of the organization. Some of that accumulated profit is going to be retained in the organization in order to run the organization or in order to meet the future uncertainties of the organization. So all of the profit is not going to be distributed as the dividends to the shareholders. So one form of the reserve is that part of the total profit which is retained in the organization. Other kinds of the reserves are those which are not yet attained or materialized in the organization. They are just present in the books of accounts of the organization. Organization has not yet achieved the excess on those. Say, for example, the surplus which the organizations do gain while revaluing their non-current assets. Do you remember the concept of revaluation of non-current assets? If the market value of the non-current assets is more than the book value of the assets, it's a revaluation. So when you are going to sell that particular asset in the market, you are then going to gain that amount. Okay, unless you have not sold that particular asset, it is still going to remain in your organization, and you are not going to materialize your revaluation reserve. So one kind of the reserve is that which is not yet materialized by the organization. One kind of the reserve is the one which is accumulated over the time period in the organization in the form of the share premium. When the organizations do issue the shares, they are recognized in the books of the accounts as per their nominal value. In front of ordinary share capital, which value do we write? Nominal value. So the excess amount which the organizations does gather over and above the nominal value of the shares is known as share premium. That is also one kind of the reserve in the organization. So these are the reserves of the organizations which the organization has maintained in order to meet the future uncertainties. So all these reserves together with the ordinary share capital are going to be recognized in our statement of financial position. Got it? Where do we recognize our ordinary share capital and other reserves? In our statement of financial position under the head of equity. When you do see the equity portion in your limited liability companies, what do you find over there? Ordinary share capital, then share premium, revaluation surplus, and retained earnings. This is the capital structure and the equity of the organizations, which are dealing as limited liability companies. Okay. So dividend is going to be done as the working under the retained earnings, but in the statement of changes in equity. From the statement of changes in equity, the final amount of the retained earnings is going to be taken. Anyhow, this is the share capital, and all these are the reserves which are going to be shown in your statement of financial position under the head of equity in limited liability companies. So they say the other reserves, revaluation reserves, records the unrealized gains on revaluation of the property, plant and equipment, PPE, IS 16. And unrealized gains means that they are not yet realized. They are not yet materialized in the organization. Once the asset is going to be sold, only then the organization is going to gain the excess over to those gains. Cannot be paid out as dividend. The only amount which can be paid out as the dividend will be from the retained earnings. From this, only the dividend is paid. From the other reserves, dividend is not going to be paid. That is why we do call this retained earning as your distributable reserve also. Okay, retained earning is your distributable reserve. For retained earning, they say records the total of the net profits and losses incurred during the date that have been retained within the business. That is, they have not been paid out as dividends yet, can be distributed as dividends. So with the passage of time, whatever the organization has accumulated as profit and has not given as the dividends to its shareholders is known as retained earning in the organization. Is everyone clear? Okay, now students, within this chapter, they have discussed the concept of the income tax as well. Although you are not required to have a lot of details regarding income tax right now, the details will be studied in your 6th paper of ACCA, that is F6 corporation, that is taxation. F6 taxation paper, you are going to read all the details. Over here, they have generally discussed the income tax. What is an income tax? Income tax is the type of the tax which is arised on the incomes of the individuals or the companies. Whatever income is going to be earned by any individual or by any company is subject to the income tax. The taxation rate is going to be levied on the incomes being earned, and that has to be submitted to the government of the country. Now, income tax in regards to the companies was previously known as corporation tax. But nowadays in UK, because we are studying the books of the UK. So nowadays in UK, it is being called as income tax. Income tax, which is going to be levied on the total profit of the company, is going to be studied over here. Only few things you have to keep in your mind regarding the calculations of the income tax in your mind, not the details. Let me just write it over here. First thing is the tax liability current year estimate or estimation. This will always be recognized in your statement of financial position under the head of your liabilities. In exam, when they are going to tell you that this amount is the estimation of your current year income tax, simply you are going to write that total amount in your SOFP under the head of liabilities. The movement will be done only in the case of the statement of profit or loss. In statement of profit or loss, the current year estimation is going to be written, and then we are going to make adjustments. We are going to make adjustments in this. What are going to be those adjustments? These are regarding over provision or under provision. If it's an under provision, you are going to add it. If it's an over provision, you are going to deduct it. Okay, this will be the only adjustment in your SOP, which you should be recognizing. Now, let's have a look at the concept behind it. We do know that whenever the organizations do prepare their financial statements, there is a specific accounting period for which those statements are being prepared. Say, for example, if the year-ending date for the accounts is 31st December, it means that the accounting period of the organization is from 1st January to 31st December. Whatever has happened during this time period is going to be recognized in the financial statements of the organization. But the tax year is not the same as the accounting period of the organization. The taxation authorities do calculate their tax by following different time periods. That is why the accounting period profit is going to be the different one, and the tax on that particular profit is going to be the different one. And the tax which is being calculated by the tax authorities will be the different one. That is why we have to make the adjustments in our books of accounts regarding that. Because accounting period and the tax year are not the same one. That is why the differences are going to arise, and we have to make the adjustments for that. Now, what organizations does? Whenever they do earn the net profit, on that net profit, they do calculate their current estimation of the tax liability. They do make the current year estimation of the tax liability. That is, we do call it as the estimation because the organizations are not sure that whether this would be the actual tax liability or not. Only when the tax authorities are going to tell them the actual amount of the tax to be paid, then they will be coming to know that this amount of the tax is actual. So they will be making the current year estimation of the tax and they will be recording it as the liability in their SOFP. After some time period, when the actual tax does come, they have to pay that tax. And that tax can be more than the estimation of the organization or can be lesser than the estimation. Say, for example, the organization just make an estimation that $50,000 will be their tax. When the actual tax liability comes, it is 60,000. Now, what does that mean? That organization has under-provided the tax liability. The tax liability which has been recognized is lesser and the actual tax liability is more. It means that this is the case of the under-provision. When the under-provision case is going to be there, the organization has to record the extra tax expense in their books of accounts. So that is why whenever there is a case of the under-provision, you have to add it in your taxation. In your statement of financial position, when there is a case of the under-provision, you are going to add it in your statement of profit or loss. If, say, for example, you find that your actual tax liability is 40,000, it means that the tax liability which has been recorded is more and the actual tax which has occurred is lesser. So this is the case of the over provision. The taxation which you have provided in your books of accounts is more, but in actual the tax liability is lesser. That is why when there is a case of the over provision, you are going to deduct it from your income tax expense. Getting my point? Mariam, क्या होगा? समझ आई कुछ? Organization, हाँ जी मैं बता रही हूँ. Organizations का accounting year और tax year tax authorities का same नहीं होते. इसलिए tax जो कि calculate किया जाता है उसके अंदर differences arise होते हैं. Organizations एक estimation बनाती हैं tax की कि इतना tax इनके corporate profit के ऊपर होगा. वो actual tax नहीं होता. Actual tax तभी पता चलेगा जबकि actual tax liability tax authorities बताएंगे. वो एक एस्टिमेशन बना के उसे अपने बुक्स ऑफ अकाउंट्स के अंदर SOFP के अंदर लिख लेती हैं. जो करंट ईयर एस्टिमेशन होगा स्टूडेंट्स, इट इज ऑलवेज गोइंग टू बी रिकॉग्नाइज्ड इन योर SOFP एज योर लायबिलिटी. उसके बाद जब अगले साल उनको पे करना पड़ता है एक्चुअल टैक्स, तब उन्हें पता चलता है कि जो उन्होंने टैक्स रिकॉर्ड किया था वो सही था या गलत था. अगर उन्होंने जो टैक्स रिकॉर्ड किया था वो एक्चुअल टैक्स से कम है, दिस इज द केस ऑफ द अंडर प्रोविजन. इसका मतलब ये है कि उन्हें एक्स्ट्रा टैक्स लायबिलिटी, एक्स्ट्रा टैक्स एक्सपेंस रिकॉर्ड करना पड़ेगा. So whenever there is a case of the under provision, you have to record the extra amount of the tax in your statement of profit or loss. अगर वो देखते हैं कि उन्होंने जो टैक्स पे किया है वो कम है उनके टैक्सेशन लायबिलिटी से, इसका मतलब ये है दिस इज द केस ऑफ द ओवर प्रोविजन. जो टैक्स उन्होंने रिकॉर्ड किया वो ज्यादा था जबकि एक्चुअल टैक्स कम है. इसका मतलब ये है कि उन्हें अब अपने करंट ईयर स्टेटमेंट ऑफ प्रॉफिट और लॉस के अंदर से दैट अमाउंट ऑफ द टैक्स डिडक्ट करनी पड़ेगी. ओके, so that's what I have written over here as well. You are going to record your current year estimation of the tax liability in your statement of financial position, in your statement of profit or loss. You are going to make the adjustment. Current year estimate plus if it's the case of the under provision minus if it's the case of the over provision. Students, in the case of the accounting entries, what actually happens? Let me just write over here. When the organizations have to record the tax liability, they are going to make the estimation of the tax and they are going to record the tax liability. Is this the first case? They are going to make the current year estimation of the tax and they are going to recognize the tax liability. This is the estimation. At that time, the accounting entry which is going to be recorded is debit income tax expense. Credit will be income tax, liability. Got it? This is going to be the accounting entry at the time of making the estimation. When they are actually going to pay the tax, what is going to be the accounting entry at that time? Debit would be this liability. Now, when they are going to pay the tax liability is going to be decreased. Decrease in liability, income tax liability is going to be debited and credit will be cash. Getting my point? Say, for example, the estimation of the tax has been 60,000 and the actual tax which they have paid is 70,000. Is this the case of the under provision or over provision? Who says under provision? Raise your hands. Who say under provision? What about you, host? Yes, this is the case of the under provision. They have provided less, but the tax liability in actual has been more. This is the case of the under provision. So because this is the case of the under provision, then they have to pass the other accounting entry to recognize this under provision. In case of the under provision, the income tax expense is going to be increased now. So in the case of the under provision, what accounting entry then they are going to pass? Debit will be income tax expense. Credit will be income tax liability. How much? 10,000, is it? 10,000 is under provision. Got it? Now your debits and credits should be equal. How much are you debiting in your income tax expense? 60,000. 60,000 has been debited. Then 10,000 income tax expenses again debited. Got it? Okay, and income tax liability. Credit 60,000, debit 70,000. So it will be having 10,000 difference. It means that in the last you have to credit it again. So your credits will be equal to your debits. So this is the case of the under provision. If you have understood this, we can do the case of the over provision also. In the case of the over provision, just this accounting entry is going to be reversed. Okay, let's read it quickly, students. They say in the case of the limited liability companies, as it is a separate legal entity, if it generates income, it will be subject to tax. My dear students, as you do know that limited liability companies are considered as the separate legal entities. That is why the concept of the double taxation arises in the case of limited liability companies. The company is going to pay the tax separately on its income, and the shareholders are going to pay the tax on their incomes separately. In the case of the partnerships and the sole proprietorships, the businesses are considered as single. So business will be paying only one-time taxation. Got it? So they say consequently the tax charge must be reflected in the statement of profit or loss as an expense, and any tax liabilities outstanding must be reflected in the statement of financial position. This is normally referred to as income tax, as it is the tax charge on the income of the company. In the UK, this was traditionally referred to as corporation tax, but it is now more commonly referred to as income tax. It should not be confused with the income tax paid by the individual employees on their salary and their earnings. So individuals also pay the income tax, but it should not be confused with the tax of the companies. The charge for income tax is based upon the level of the profits earned by the company and the tax rates in place at the time of the calculation. Company year ends and tax year ends rarely match. Therefore, companies must estimate their income tax liability at the end of each accounting period and record an appropriate estimate of the liability likely to be paid. And where are they going to recognize this estimation? In their statement of financial position. They say these estimates are unlikely to be entirely accurate. They are usually a best estimate when the accounts are being prepared. And as such, companies tend to be either over or underestimate the provision for income tax, which is adjusted for the following year's accounts. You will not be required to have any tax-related knowledge to calculate tax charges. For the purposes of financial accounting, you are required to understand how income tax charges and liabilities are accounted for in limited company financial statements. In many ways, it is similar to accounting for provision. Recognize the liability when required, with any movement in the liability accounted for in the profit or loss. So do you remember the concept of IAS 37? They are telling you that over there also you have discussed the recognition of the provision. So in the same way, you actually are taking the income tax as well. So steps for recording income tax. At the end of the year, a company should make following double entry for its estimate of the tax liability. When the estimation is going to be made, we have to debit income tax charges and we have to credit income tax liability. Then following the year end, the actual tax liability will be calculated and paid. The associated double entry is debit income tax liability and credit cash. This will be your actual tax liability which is going to be paid. In the third step, it is unlikely that the actual charge will match the estimated liability, so the tax liability account will be left with the closing balance carried forward. This needs to be removed as the debt has been settled. There should not be any carry forward balances because the tax authorities have been paid the correct amount. If there is an over provision in the prior year, that is, estimate was greater than the amount paid, there will be the closing credit balance carried forward. This is adjusted as follows. In the case of the over provision, debit income tax liability and credit income tax charge. Just the reverse of this. As the company overestimated, the charge for the following year is reduced by the appropriate amount so that over the 2 years period, the correct charge has been recorded. If there is an underestimate in the prior year, there will be a closing debit balance carried forward. This is adjusted as follows: debit income tax charge, credit income tax liability. In the case of under provision, this accounting entry is going to be passed. In the case of the over provision, you have to reverse the accounting entry. So they have given us the recognition in your statement of profit or loss as well. You are going to write your current year tax estimate. If there is an under provision, you are going to add it. If there has been an over provision, you are going to deduct it. And total income tax charge for the year will be represented in your statement of financial position. And they say also, in simpler terms, the income tax liability on the SOFP should only ever be equal to the estimate of the tax liability at the end of the year. That is why you have to make these adjustments. Now, understanding number 7 is there. The requirement of the question is to draw up the tax charge and income tax payable accounts for the years ended 31st December 2004 and 2005, and detail the amounts shown in the statement of financial position and statement of profit or loss in both years. So you have 2 years under consideration, students: 31st December 2004 and 31st December 2005. For both years, you have to pass the accounting entries and you have to show their recognition in your statement of profit or loss and statement of financial position. Start doing this question, students.
Ma'am?
Yes, dear.
Can you send me a pic of the board?
Sure, dear.
Thank you.
Rabia, sorry, I have just seen your message which you have sent yesterday. Yes, dear. No, we don't have. VAT is there, but income tax is not. Students, do write the accounting entries with the dates. Okay, that would be helping you. Students, shall I start doing this? Do you need some more time? Okay, students, let's start doing it. Okay. Gary Bailey Company commenced trade on 1st January 2004 and estimated the tax payable for the year ended 31st December 2004 was 150,000. So at 31st December 2004, the accounting entry which is going to be passed would be debit, income tax, expense with an amount of 150,000 and credit would be very good. Income tax, liability account 150,000. Then they say in September 2005, the accountant of Gary Bailey Company received and paid a tax demand for 160,000 for the year ended 31st December 2004. The transaction has happened at which particular date? At which date, students, they have paid? September 1st, 2005. In the next year, they are paying. At the time of the payment, the accounting entry would be debit, income tax, liability account. How much they have paid? 163,000. And credit would be, cash account. At the time of the payment of the tax liability. How much amount? 163,000. What do you understand by this? The estimation in the last year has been 150,000 and the tax which has been paid in actual is 163,000. Is this the case of the under provision or over provision? Under provision. Very good. So what are they going to do? At 31st December 2005 in this year, they are going to make an accounting entry for under provision. For under provision, what is an accounting entry? Debit, income tax, expense account, credit would be income tax, very good, income tax, liability account. With how much amount? Very good, 13,000. Then they say at 31st December 2005, he estimated that Gary Bailey Company owed 165,000 for income tax in relation to the year ended 31st December 2005. For December 31st, 2005, the tax estimation of the liability is 165,000. We are again going to pass the same accounting entry with an amount of 165,000. What is that going to be? Debit, income tax, expense account, credit would be income tax, liability account. How much estimation? 165,000. Cleared? In the next year again, the actual tax is going to be paid. Then they are going to see whether there is an over or under provision. They are going to recognize it. Cleared? This is how you are going to pass the accounting entry. Now they have asked you their recognition in your statement of financial position and statement of profit or loss also. So students, in your 2004, in your statement of financial position, how much tax liability you must have recognized? Estimation of that particular year, that is 150,000. In 2005, in your SOFP, how much you must have recognized? That year recognition, estimation, that is 165,000. In your SOPL of 2004, how much you must have recognized? 150,000. In your 2005 SOPL, how much you must have recognized? How much you must have recognized in your SOPL of 2005? this and the adjustment regarding over or under provision. Got it? So estimation has been 165,000 and there has been the case of the under provision. That is why you must have added how much? 13,000. So how much it is in total? 178,000. 178,000. If you want to make your ledger accounts as well, you can. And you will be finding the same balances which you then have to report to your SOPL and SOP. Clear to everyone? In our students, understanding number 8 is there. The requirement of the question is, which of the following is correct relating to taxation in chalk companies' financial statements as at the end of the current year? Can you do this? Tell me the right option. Is clear?
Last year.
No. No. Last year, current year. They have not mentioned any year. Okay. So they are asking you about the current year. So last year would be any. Option C and option D are the same ones. By mistake. Students, which amount are you going to take to your SOFP regarding current year? In SOFP, which amount does go? Current year tax estimation, is it? So which amount is going to go? 230,000. That is the last year tax charge. Last year. They are asking about the current year. 265,000.
This is over provision.
Over provision, very good. This is the case of the over provision. Chalk company estimated the last year's tax charge to be 230,000. Chalk company's tax advisor settled the amount due with the tax authorities at 222,000. The tax estimation for the last year has been 230,000. The tax which is actually being paid is 222,000. Actual tax is lesser than the estimation. So this is the case of the over provision. How much over provision is there? 8,000. Got it? This is the case of the over provision. Okay, the difference arose because Choco companies' financial statements were submitted sometimes before the tax computation was finalized. Therefore, the directors had to make a prudent estimate of the potential tax liability to include in the financial statements. This year, Chalk Company estimated its tax bill to be 265,000. Without any confusion, you have to take it to your SOFP. Current year tax estimation does go to your SOFP. But it is a little confused as to how this should be reflected in the financial statements. So this will be going to the SOFP. In your SOPL, you are going to write the current year charge, that is 265,000, and you are going to make the adjustment regarding over or under provision from the previous year. So in the previous year, there has been over provision. That is why you are going to deduct the amount of the over provision, that is 8,000. So it will be 257,000. The amount which has to be shown in the SOPL is 257,000. So option C is the right one. Clear, everyone? Samia, are you clear here? Okay, now students, the next chapter which we are going to start is very easy chapter if you are cleared about the previously taught concepts. That is about control account reconciliations. Reconciliation is a concept which arises when we have to compare two sets of data with each other. In organizations, we are maintaining different sets of the data at the same time. Say, for example, you make the books of the prime entry, and then at the end of the day, the totals of the books of the prime entry have to be transferred to the ledger accounts. It means that the total of the books of prime entry must be equal to the balance, must be equal to the total of the ledger accounts as well, because both are arising from the same set of the data. For reconciliation, the organizations are going to compare two sets of the data. If there are any discrepancies, if there are any changes, they have to be removed. On the other hand, the organizations are going to, organization 1 is going to make its own reports, and organization 2, if it's related to organization 1, will be making its own records regarding organization 1. At the end of the particular time period, both the balances which are prepared by both the organizations must be same. If, say, for example, organization 1 is having receivables, for the other organization, organization 1 is a payable also. So organization 1 will be making the receivable account, organization 2 will be making the payable account. The balance shown by the organization 2 in its payable account must be equal to the organization's 1 receivables account balance. In the same manner, when the organizations are dealing with the banking authorities, organizations are preparing their cash book or their bank account. Banks are making their payables account. For organizations, if the organization has has saved some amount in the bank, then bank is receivable for the organization, and for the bank, organization is payable. So both the accounts have to be matched at the particular end of the time period. So organizations are going to reconcile their accounts in order to see if there are any differences arising. If the differences are there, they are because of the errors or frauds. They have to be removed from the books of the account so that all the accounts must be showing the same balances. Now, regarding control account reconciliations, they are just telling us about one area of the reconciliation. What is the control account, students? The organizations just prepare so many control accounts, and the two popular control accounts are receivables ledger control accounts and payables ledger control account. You can consider that the total of the receivables ledger, when maintained, it is known as receivables ledger control account, and when the total of the payables is going to be maintained, that ledger is called as payables ledger control account. And you are already familiar about that. When the organization will be making the books of the prime entry, say for example, organization is making its sales day book. Sales day book is one of the book of prime entry. In that, organization just record its credit sales. In sales day book, organization just recognizes its credit sales. At the end of the particular time period, at the end of the day, normally, the balance on the book of prime entry of the sales day book has to be transferred to the receivables ledger control account. Got it? In that case, the organization will be knowing that how much it is owing to the how much is owed to the receivables, and it has to receive it in the future. This much amount is owed to the receivable and it is going to be received in the future. On the other hand, organization will be making the memorandum accounts as well. The personal accounts of the each receivable is going to be made. So that organizations must be knowing that this amount has to be received from the individual receivables of the organization. Obviously, organization will be having so many receivables, say for example, A, B, C. 3 receivables are there. The total of these 3 receivables will be shown in the receivables ledger control account, and separately their memorandum accounts will also be maintained. At the end of the particular time period, the total of the memorandums must be matching to the receivables ledger control account. Same they are going to do in the case of the payables as well. And if their balances are not matching, it means that there is some discrepancy that is arising due to the error and fraud. So control account reconciliations, we are going to understand in this chapter. In this chapter, we are going to understand about the control accounts, memorandum accounts, that is the list of the balances, and how are we going to reconcile them. So on one side, the organization is making its memorandum accounts. On the other side, it is maintaining its control accounts. They must be equal to each other. We are going to reconcile them if there are any kind of the differences. Let's read it quickly. They say control accounts are the general ledger accounts that summarizes a large number of transactions. As such, they are the part of the double entry system. Like any other kind of the ledger, control account ledgers are also the part of the double entry system. Control accounts are used to prove the accuracy of the ledger accounting system. They are mainly used with regards to the receivables and payables balances. When an entity transfers the daily total of the sales day book into the ledger, general ledger, the double entry is debit receivables ledger control account, credit sales, which I have told you as the normal accounting entry for sales. What is the normal accounting entry for credit sales? Debit receivables, credit sales. This is basically an accounting entry which you are going to pass when the total of the day book is going to be transferred to the receivable ledger control account. At that time, this accounting entry is being passed. Debit will be receivable ledger control account and credit will be sales revenue. And when it transfers the total of the purchase day book, the double entry is debit purchases, credit payables ledger control account. At the same time, most business entities will maintain what is referred to as memorandum. This is a separate list of the individual receivable and payable amounts due from each customer and to each supplier respectively. This simple list of balances is used as a record so that an entity knows how much each customer is due to pay and how much it is due to pay each supplier. This assists with the credit control and cash flow management. A key control operated by the business entities to compare the total balances on the control account at the end of the accounting period with the total of the separate memorandum balances. In theory, they should be identical. This is referred to as control account reconciliations. Let me just tell all this thing in Urdu as well. Mariam, control accounts, आप समझ लो कि what should I say? Control account एक किस्म के collaborative accounts हैं, ठीक है? जो कि total of the receivables या payables के लिए बनाए जाएंगे. Now you are not in the class. How shall I explain? Okay, let me just make a diagram for this, and I will be sending you the picture. The organizations Mariam बनाएंगी control accounts, और organizations साथ बनाएंगी individual accounts भी. Individual accounts का total match होना चाहिए control account के total से. Both should be matching with each other. If they are not matching with each other, इसका मतलब ये है कि कोई ना कोई गलती की गई है. जब हम लोग डे बुक बनाते हैं, बुक्स ऑफ प्राइम एंट्री बनाते हैं, स्पेसिफिकली सेल्स डे बुक और परचेज डे बुक जब हम बनाते हैं, तो उसके बाद हम लोगों ने वो तमाम तर टोटल ट्रांसफर करना होता है कंट्रोल अकाउंट में. At the time of transferring the balance from the day book to the control account, we do pass an accounting entry as debit receivables ledger control account and credit sales revenue. इसी तरह से जब हम लोग purchase day book से डेटा ट्रांसफर करेंगे purchase ledger control account के अंदर, तो उसके वक्त हम लोग accounting entry पास करेंगे debit purchases और credit payables ledger control account. एक तरफ हम लोग कंट्रोल अकाउंट बना रहे होंगे जो कि टोटल रिसीवेबल्स और टोटल पेएबल्स ऑर्गेनाइजेशन को बताएंगे. On the other hand, we are going to make the individual list of the balances as well, ताकि हम लोग को पता चले कि इंडिविजुअली हम लोगों ने हर रिसीवेबल से कितना रिसीव करना है और हर पेएबल को कितना पे करना है. एक टाइम पीरियड के एंड के ऊपर कंट्रोल अकाउंट्स का बैलेंस इक्वल होना चाहिए इंडिविजुअल बैलेंसेस के. ठीक है, तो ये कंट्रोल अकाउंट रिकंसिलिएशन कहलाती है. Now students, they are giving us a pro forma of receivables ledger control account, which is going to be prepared on the same principles. What is a receivable for us? Liability, expenses. What are receivables for us? Asset. They are asset. Receivables are asset. So you are going to follow the same principles while making the receivables ledger control account. Whatever is going to increase your asset has to be posted on the debit side. Whatever is decreasing your asset has to be posted on the credit side. Opening balance on the receivable is going to be posted on the debit side. Closing balance will be posted on the credit side. समझ आई इस चीज की? ये बेसिक प्रिंसिपल्स हैं जो कि हमें फॉलो करने हैं. जब वो आपको ओपनिंग बैलेंस देंगे किसी भी एसेट का, you have to post it on the debit side. The closing balance of the asset will be posted on the credit side. On the other hand, all these are going to be posted on the basis of the accounting entries which we have discussed. But to summarize the concept, you can consider in your mind that whatever is going to increase your receivable balance has to be posted on the debit side. Whatever is going to decrease it has to be posted on the credit side. जैसे कि अगर क्रेडिट सेल्स होती है तो क्रेडिट सेल से रिसीवेबल ज्यादा होते हैं. जैसे जितनी ज्यादा क्रेडिट सेल होंगी रिसीवेबल उतने ज्यादा होंगे. तो क्रेडिट सेल यहाँ पर डेबिट साइड पे लिखेंगे. इफ से फॉर एग्जांपल कोई चेक आपको दिया था रिसीवेबल ने कि भाई ये जाके आप बैंक से क्लियर करा लो, वो चेक डिसऑनर हो गया, बैंक ने उसको डिसऑनर कर बाउंस हो गया वो चेक. ठीक है, इससे रिसीवेबल ज्यादा होंगे कि कम होंगे? ज्यादा होंगे. चेक उन्होंने दिया, वो डिसऑनर हो गया, बाउंस हो गया, दोबारा वो रिसीवेबल उधर के उधर हो गए, पेमेंट तो हुई नहीं है. ठीक है, तो डिसऑनर चेक भी आप लोगों का डेबिट साइड पे आएगा. गेटिंग माय पॉइंट? इज एवरीवन क्लियर? अच्छा, इसके अलावा आपने कोई इंटरेस्ट चार्ज की है, यू हैव चार्ज एनी काइंड ऑफ इंटरेस्ट फ्रॉम द रिसीवेबल्स, इट इज गोइंग टू इंक्रीज द बैलेंस ऑन द रिसीवेबल्स. If you have received any kind of payment from the receivables, it's going to decrease their balance, so you are going to post it on the credit side. So stick to the basic idea: increase in asset debit, decrease in asset credit. Okay, so balance brought forward. If there is a credit, sales STB is sales day book, abbreviation for sales day book. Bank CB means cash book. Dishonored checks on the debit side. Bank refunds of the credit balances on the debit side. Interest charge on the debit side. Then sales return J book. If there are sales returns, if there are any kind of the returns made by your receivables, they are going to reduce. Receivables have to be posted on the credit side. Bank, if you have received any kind of cash from your receivables, has to be posted on the credit side. Irrecoverable debts. What is the accounting entry for irrecoverable debts? Debit irrecoverable debts, credit receivable. So you have to post it on the credit side. Contra with purchase ledger control account. Now, what is contra? Maybe that is new thing for you. Students, sometimes the receivables, the persons who are our receivables are our payables also. From the same persons to whom we have made the sales, we have purchased something from them as well. In that case, our receivables are our payables also. Instead of paying them cash and then receiving them that cash back, we do make the contra in our books of accounts. So we do cancel their balance. If there is a contra in receivables, you are going to post it on the credit side. If it's the contra in the payables, you are going to post it on the debit side. Contra receivables ledger के अंदर credit side पे आएगा, reduce करना है ना account को. अगर payables के account बना रहे हो तो उसमें contra debit side पे आएगा. Got it? Now, my dear students, one more thing which they have mentioned over here. I told you that opening balance normally has to be posted on the debit side for assets and closing balance on the credit side. But they are mentioning on the credit and on the debit side as well. Sometimes due to any kind of mistake only, you are going to have the credit balance of the receivables. Receivables से तो पैसे लेने हैं ना आपने, उनका credit balance किस तरह से show हो सकता है? कोई गलती की है या फिर आप लोगों ने कोई ऐसा मतलब fraud वगैरह कुछ हो रहा है जिसकी वजह से ये show हो सकता है. So in the exam, you are going to consider that which kind of the balance they are giving you. On that purpose, on that basis, you are going to show it. If they are not mentioning anything, then you have to follow the normal principle. Normally, opening balance debit, closing balance credit.
Ma'am, why is interest charged on the debit side?
Interest charged on the receivables. अगर आप receivables से कोई interest charge करते हो, so that is going to increase the balance of the receivables. If say, for example, receivables are not following the payment date, the due date is not being followed, you are taking any kind of interest from them. So it is going to increase the balance of the receivables. Okay. Is everyone cleared?
Yes, ma'am. Ma'am, who's contra? FPLCA.
Contra with payables ledger control account. जब आपके receivables ऐसे हैं जो आपके payables भी हैं, in the simple language, जिन लोगों को आपने sales की हैं उनसे आप purchase भी कर रहे हो, तो उनको बजाय एक हाथ से पैसे देने के दूसरे हाथ से लेने की हम अपने account के अंदर ये adjustment कर देते हैं. ठीक है? Receivables के ledger में contra credit side पे आएगा और अगर आप payables का ledger बना रहे हो तो उसमें debit side पे आएगा.
Okay, ma'am.
Got it?
Yes.
Students, one more thing. In the exam, they are going to mention you the opening balance and the closing balance. Okay? Opening balance, when they are going to mention, you have to write it on the debit side. Okay? Closing balance, when they are going to mention, you have to write on the credit side. But what do we call this balance? This balance? Closing balance? Credit balance or debit balance? This one is debit balance. Okay. So when they say opening balance, debit and credit, say for example, they have made two columns. And closing balance. Opening balance, debit, means that it has to be posted over here. Closing balance debit is also going to be posted over here, but you have to write it on the credit side. Got it? Closing balance, if they say closing debit balance is this, you are going to write it on the credit side. Opening balance debit, if they say, you have to mention on the debit side. Okay? Getting my point? About this, please do not be confused. ये closing balance जो है ना, ये वैसे debit balance ही है. Okay? If they say opening balance debit, opening debit on that side. If they say closing balance debit, write on the opposite side. Please do not be confused in the exam. They have given us the pro forma for payables ledger control account as well. The normal balance of the payables is credit. So opening balance, credit on the credit side, closing balance on the debit side. On the debit side, what balance you are posting as a closing balance is known as a credit balance. Whatever is going to increase your payables is going to be mentioned on the credit side. Whatever is going to decrease your payables has to be mentioned on the debit side. Got it? Say, for example, if you are making any kind of credit purchases, your liability is going to be increased. Mention it on the credit side of the payables ledger account. If there are any kind of the dishonored checks in regards to the payables, where are you going to post them? On the credit side, obviously. Okay. If they have given you, if you have to pay some amount to your payables and you have given the check instead of making the cash payment and that check is dishonored, payables are again going to be increased. So you have to post it on the credit side. If you have made any kind of the payments to the payables, post it on the debit side since it is decreasing your payables. Okay. So purchases returns on the debit side. So bank account, if you can see debit side, you have made any payment to the payables, post it on the debit side. If you have received any kind of the discount from the payables, because it is decreasing their balance, post it on the debit side. Contra with receivables control ledger account on the debit side. Then credit purchases on the credit side. Bank refunds of the debit balances. If there are any kind of the debit balances and the bank is making you the refund for that, you can consider it as the dishonored one. So it is again going to increase your balance on the payables, post it on the credit side. Is everyone clear regarding this, students? They have explained the contra entries over here. Whenever there is a contra, what are you actually doing? You are eliminating payables and receivables balance. So the accounting entries normally debit payables, credit receivables. When you have to reduce payables, you are going to debit them. When you have to reduce receivables, you are going to credit them. So ultimately, obviously, we are passing them in the ledger account. हम लोग ledger account के अंदर receivables के अंदर क्यों credit side पे contra करते हैं? क्योंकि ये accounting entry pass हुई होती है. Okay. First, we have passed this accounting entry, then we are going to show it in the ledger account. So the accounting entry for contra is debit payables, ledger control account, credit receivables, ledger control account. Now, they are explaining about the credit balances on the receivable ledger account. As I explained to you earlier, normally you are not going to see the credit balances on the receivable ledger account. It's only because you have made some mistake or there is some discrepancy involved. If this is going to be the case, you have to eliminate that closing balance. That credit balance has to be eliminated. And when on the receivables, that credit balance has to be eliminated, what accounting entry you are supposed to pass, students? When you have to eliminate it, you are going to debit the receivables. Is it? गलती से आपके वो हुए हैं ना, क्रेडिट आपका गलती से शो हो रहा है, तो उसको डेबिट कर दो क्या उसको खत्म करने के लिए. Anyhow, those mistakes can be the customer has overpaid. The customer was not due to be paying that much amount, but by mistake, the customer has overpaid you. Credit notes have been issued for fully paid for goods. Students, what are credit notes? Who does issue the credit notes? This comes in the exam, repetitive question in the exam. Who issues the credit notes? Suppliers? Suppliers just produce credit notes? Are you sure? Who is not sure about this? You yourself? Who issue the credit notes? What are credit notes basically? Debit notes and credit notes. Credit notes have been issued for fully paid for goods. What does that mean? Fully paid for goods. Students, credit notes and debit notes does arise in the case of the purchases returns and sales returns. Credit notes are issued by the suppliers and debit notes are issued by the customers. It is just a request to reverse the balance in the accounts. Say, for example, if the purchases are going to be returned, it means that now the balance of the purchases has to be reversed, because when the purchases are returned, it means that to the other party, now we are obliged to pay lesser amount. So that amount has to be reversed. Okay. So credit notes are going to be issued by the suppliers and debit notes are going to be issued by the customers. Anyhow, payment is received in advance of raising invoices. Invoice has not yet been raised and the payment is made in advance. In that case also, because the mistake has happened, receivable ledger control account is going to give you the credit balance. So in order to correct that, you are going to debit receivables and you are going to credit payables, because this was just a mistake. You will not be tested in that regard, but generally you must be knowing the reasons behind. Okay, so we are going to do this question regarding reconciliation after the break, students. Okay. Okay, Mariam, then see you after the break, dear.
Okay, ma'am.
Okay, dear. Mariam, have you finally decided that you are not going to attempt F2 in this attempt?
Miss F2, maybe I'm not going to apply now. Later. I'll clear first my F1 and F3.
Only 17 chapters are there. Only little bit effort is going to be required, dear.
Yes, ma'am, I'm trying, but it's difficult comparing to F1 and F3.
Okay, in January, students, you people are going to stay with me over here up till 6 o'clock. I have to make you people study. Okay, you will be staying over here and you are going to revise your topics over here. I will be sitting in my office up till 6 o'clock. Whatever your questions are going to be there, you have to ask me. Okay, I will lock the door from outside. You people are going to be here. Okay, and what I was thinking about your final preparation, towards the end of the January, you can just consider that after 20th of January, you have to attempt your exams. So what we are going to do, before every exam, before whenever you are going to book the exam, before to that, we are going to have special makeup class. 2 or 3 makeup classes we are going to have. So you have to book your exams with the gap of 3 days in between. Okay. Say for example, first you are going for F3, after that 3 days gap, then F2, then in the last you can attempt F1 with 3 days gap. In the last 10 days of the January, you are going to attempt this. Okay, that would be more feasible for you all. Because in February, management has been right now also, they have been telling me that in February, maybe in the first or the second week of the February, the next session is going to be started. So you should not be delaying it. So before to the start of the next session, you should be having at least a little bit break, 1 week break you are going to have, and then you can enroll in your new papers. Okay, so this would be our strategy. Okay, now students, we were, yes, Apak, please check. Some private discussion, secret discussion. Okay, yes, what it has been? No? Okay. Students, we are now going to practically apply the concept of the reconciliation of receivables and payables ledger control account. But over here in this question, they are requiring you to prepare the receivable ledger control account first. On the basis of those principles which we were discussing before to the break, you have to prepare the receivables ledger control account. Let's read the requirement of the question first. Prepare the receivables ledger control account and the payables ledger control account for Jones Company for the month of November 2005 to determine the closing debit and closing credit balances on the receivables ledger control account and payables ledger control account respectively. So they are requiring us to prepare receivables ledger control account and payables ledger control account for the month of November. So the data is distributed in 3 slides. On the last slide, if you can see, they are giving us the balances. They say at 30th November 2005, 30th November is the end of the month. The month, this is just for 1 month, this ledger, okay? At the end of the November, the balances in the receivable and payables ledgers are extracted total. Debit balances and credit balances have been given to us. These are closing balances. Receivables ledger balance, closing balance has been given, and payables ledger closing balance has been given. Is it, students? At 30th November 2005. Okay. On the other hand, you must be noting that receivables ledger debit balance has to be calculated, whereas credit balance is being given to us. For payables ledger control account, debit balance is being given to us and credit balance has to be calculated. And these are the closing balances at 30th November 2005. Let's have a look at the question, students. Jones Company prepares monthly receivable and payables ledger control account at 1st November 2005. The following balances existed in the entity records. Receivable ledger control account opening balance and payables ledger control account balances, opening balances have been given. These are opening balance. In the end, closing balances have been given. In the start, opening balances are being given. I will be asking you the question, students. So we are going to make the receivables ledger control account. Debit and credit. We are going to prepare payables ledger control account. Debit and credit. At 1st November 2005, the opening balances has been given. Receivables ledger control account, the opening balance 54,000. Where shall I have to write this? Opening debit balance of receivables ledger control account. On the left side or on the right side? On the left side. Very good. This is opening debit balance. Opening debit. If it is closing debit, write on the opposite side. Opening debit on the left side. So we have to write it on the, and then we have credit balance of 1,000 on the right side. On the credit side, we have to write. So this one is balance brought forward. Balance brought forward, 1,000. Same for payables ledger control account. Debit balance is 200 and credit balance is 43,000. So on the debit side, we are going to write about which balance? Very good, 200. Rabia on the credit side? Very good, 43,000. Okay, they say the following information was extracted in November 2005 from the entity records. Credit sales, 251,000. Where shall I have to write this 251,000? Afaq will be telling me. Of which account? Receivable. Very good. Credit sales are going to be written on the debit side of the receivables ledger control account. How much amount? 251,000. Cash sales. Samiha is going to tell me where are we going to write the cash sales. Yes. Very good. So we are not going to write anywhere because the accounting entry is debit cash, credit, sales. So we are not going to write it anywhere. Then we have credit purchases. Khizr is going to tell where are we going to write credit purchases? Very good. On the credit side of this, payables ledger control account, we are going to write the credit purchases. How much amount? 77,000. Then we have credit sales returns. Aisha, where are we going to write credit sales return? Sorry? Debit side of which account? Wrong. Rabia? Credit side of? Very good. On the credit side of the receivables ledger control account, we do write credit sales returns because the accounting entry for the credit sales returns is debit, very good, debit sales returns and credit receivables. So on the credit side of the receivable ledger control account, we do write credit sales returns. How much amount is there? 11,000, 11,000. Okay, then we have credit purchases returns. Mariam, where are we going to write credit purchases returns?
Debit side, ma'am.
Of which ledger?
Receivable account.
Payables ledger control account. Debit side of the purchase payables ledger control account. Okay. Credit purchases are related to the payables. So credit purchases returns are going to be written on the debit side of this account. The amount is 3,000. Okay, then amounts received from the credit customers. Amounts received from the credit customers. Sorry? Debit receivables. When we receive the amount, yes, when we receive the amount, it reduces receivables. So on the credit side of this ledger, we are going to write the amount received from the amounts received. Basically, we need to write cash, okay, because the accounting entry is cash account debit, receivables account credit. So 242,000. Is everyone cleared up till here?
Yes, ma'am.
Now, students, we have dishonored checks. So, Miha, where are we going to write dishonored checks? Debit side. Very good. On the debit side of the receivables ledger control account, we do write this amount. Dishonored checks. The amount is 500. Okay, then amount paid to credit suppliers. Hizar? Very good. Debit side of the payables ledger control account accounting entry is debit payables, credit, cash. Got it? On the debit side of the payables ledger control account, we are going to write the amount paid to the suppliers. Okay, so amount is how much? 74,000. Then we have cash discounts received. From whom do we receive the discounts? Suppliers. Very good. From payables, we take these discounts. What is an accounting entry for cash discounts received? Debit payables, credit, discount received account. Okay. Discount received is going to be considered as our income. So where are we going to write this cash discount received? On the debit side of the payables. How much amount is this? Cash discount, that is 2,000. Okay, then we have increase in allowance for, okay, we have irrecoverable debts written off. Where are we going to write irrecoverable debts written off, Aisha? Debit side? Credit. What are irrecoverable debts? Sorry? Yes, you are right. Tell me. Okay. Yes, Rabia? Very good. Those debts which are not recovered from our receivables, which have become bad. हमें receivables ने पैसे नहीं दिए, वो हमारे बुरे कर से हो. So this is going to reduce the balance of the receivables. We are going to write it on the credit side. Irrecoverable debts. What is an accounting entry for irrecoverable debts? Debit, irrecoverable debts, expense, credit, receivable. Very good. Irrecoverable debts. How much is the amount? 4,000. Then students, we have increase in allowance for receivables. What is an accounting entry for increase in allowance for receivables? Rabia will be telling me that, okay, first tell me where are we going to record this increase in allowance for receivables? Debit side? Okay, Aisha, you tell me. Afaq, you tell me. No idea? No, tell me something. Is it? You don't know? Samiha? Credit side? Mariam?
Debit side of receivables.
All of you are wrong. We are not going to write them anywhere. Increase in allowance has no connection with the receivables account. Whenever the allowance is created, what is an accounting entry at the creation of allowance? Debit irrecoverable debt expense, credit allowance for receivables. When that allowance is going to be increased, same accounting entry is going to be passed. When the allowance is going to be reduced, reverse the accounting entry. When we do create an allowance for the receivables, debit irrecoverable debt expense, credit allowance for receivables. Full chapter of receivables you have not understood, students. It means. Students, we create allowance for receivables because we do not want to write off receivables. Allowance create करने का मकसद ये होता है कि हम लोग receivables को write off नहीं करना चाहते. Okay, that is why, because we are having a doubt. For doubtful debts, we create an allowance. We are not sure that whether receivables are going to pay or not. So we do create an allowance. Instead of writing the receivables off, we do create an allowance. So at the time of creating an allowance, debit, what do we debit? Irrecoverable debt expense, credit, allowance for receivables account. Got it? So increase in allowance is not going to be written anywhere. Interest charged to the customers. Rabia, interest charged to the customers. Very good. Debit side of which account? Very good. Interest charged from the receivables? Or 1,400. Contra settlements. On which side are you going to write, Aisha? Credit side of which ledger? Payables? No. Hizr? Hizr is just joking. I cannot trust you, Hizr, in this regard. Afaq, you tell me, contra settlements? He is just making you all fool that he is not preparing anything. I'm telling you. Contra, if they are not going to mention anything, you must be understanding that it is for both of the things. They are not going to mention. Contra is for payables, you are receivable. For receivables, there is a payable. For both the accounts, it is going to be done. Okay, in both the accounts. Contra for receivable on the credit side, contra for payable on the debit side. Okay, don't trust these kind of students. I'm telling you, I was one of these guys. I used to try make others fool. And I'm not preparing, I'm not. So don't trust. Okay, anyhow. So contra is going to be written on the credit side of the receivables. You are going to reduce this. And you are going to reduce the payables account as well. So on the debit side of the payables contract, okay? 800. So is everyone clear? Now, students, the closing balances. Receivables ledger debit balance has to be calculated, whereas credit balance is given 2,000. Afaq, where are we going to write this closing credit balance of the receivables? On the debit side. Very good. So on the closing balance, you need to be careful. Closing credit means that you have to write on the debit side. So this 2,000 is going to be written on the debit side. Okay, then payables ledger, debit balance is going to be mentioned on the credit side. Okay, so how much it is? 200. About this you need to be careful. Okay, look for the opening balances. What we have done, opening debit balance has been written on the debit side, but the closing credit balance is written on the debit side. On the opposite side, you have to write. Okay, now you have to close them off. How are you going to close the ledger balances? Ledger account, sorry. You are going to add both the sides, and the total of the heavier side is going to be written on both sides. So in the receivable ledger, the debit side looks heavier, and the payables ledger, the credit side looks heavier. Okay, so let's total them all. Total them, students. 54,000 plus 251,000. Sorry?
3089.
The total of this side?
Yes, ma'am.
3089 double 308900. Now you have to calculate the balance, carry it down, deduct all these from this total. 308900 minus 1,000 minus 11,000.
And we have to each time.
Sorry? From this 308900, deduct all of the right side. Minus 1,000.
307900.
307900? No, dear. No, you have to deduct all. Minus 1,000, minus 11,000, minus 242,000, minus 4,000, and then 800. So we have 50100. So they have mentioned that the debit balance has to be calculated. Debit balance means this balance was needed to be calculated. 50100. Okay, same we are going to do in this case, payables ledger control account as well. 43,000. 1, 2, 1, 2,
4 0.
and 4 zeros. Okay. 120,000. Okay, then 120,000 minus all of these. Oh, 40,000. 40,000. So like this we have calculated. Is everyone cleared? Sorry? No? So you can do it later as well, okay? But this is going to be the way in which we are going to do, okay? Be careful about the calculation, students, because in the exam, they will be giving you the options, and from those options you have to select. So if you are doing any arithmetic error as well, it is going to count a lot. So students, these are the repetitive questions in the exam. Not in the case of the reconciliations, they will be requiring you to calculate the closing balances, or they will be requiring you to calculate any of the missing item from these accounts. Okay, say for example, they will be asking you to calculate the credit sales. Credit sales will be calculated by making the receivables ledger control account. So all the figures which they have mentioned in front of you, you have to adjust in the account, and the balancing figure would be this one. Okay, so you must be knowing about this. Mariam, are you cleared?
Yes, ma'am.
Okay, great. Now students, regarding control account reconciliations, they are telling us, as stated above, the reconciliation is the working to ensure that entries in the ledger accounts, memorandum accounts. Ledger accounts is the simple name which they are giving to the individual balances. Okay, simple ledger account. Simple ledger account, Mr. A's ledger account, Mr. B's ledger account, these are also known as personal accounts. Okay. Agree with the entries in the control account. So individual ledger balances total must be equal to this total balance. Okay. The totals in each should be exactly the same. If not, it indicates an error in either the memorandum account or the control account. If they are not matching, it means that there is some error in the individual accounts or in the control account. All discrepancies should be investigated and corrected. Now, understanding number 2 is a theoretical question. Suggest reasons why there might be a difference between the balances on the receivables ledger control account and the total of the list of the accounts receivable ledger balances. Why there must be difference? If you are transferring the wrong total from the books of the prime entry to the ledger accounts, there is an error. If any of the transactions, instead of writing on the debit side, you have written on the credit side, there is an error. If you have missed anything from these control accounts, there is an error. Your balances are not going to match. Same is going to be the case over here. So there can be several reasons. You can discuss about all these. They can be the reasons for not your accounts are not being matched with each other. Okay, now students, they say the format of the control account reconciliations is going to be this one. You have to keep in mind this and this for control account reconciliations. Students, receivable ledger control account is like this, but we have prepared. If you have done any kind of mistake in your receivable ledger control account, you have to correct it in your receivable ledger control account. In the exam, they will be giving you the balance and you have to adjust it according to the errors. They will be telling you that the closing balance of the receivables ledger control account is this, but it is not matching with the memorandum account. And these are the mistakes which you have done in your control account. If those adjustments have to be made on the debit side, you are going to write them on the debit side. If those have to be made on the credit side, you have to do them on the credit side. After making adjustments, you are going to get the revised balance. Okay? After correcting the errors, which is the balance that is given you by the examiner, you will be getting the revised balance. Okay? And that revised balance must be equal to this balance, this revised total balance. And on the other hand, in your individual accounts, in your memorandum accounts also, there might be any mistakes. So in the memorandum accounts, the balance is going to be there. Balance is extracted from the list of the receivables. If any kind of the errors have been made in those individual balances, you have to adjust them and you are going to get the revised balance. And this revised balance obviously must be equal to the balance in the control account. So simply, if you have made any mistake in the control account, you are going to adjust over there. If you have made any mistake in the individual ledger account, you have to adjust it over there. Ultimately, both the balances must be equal. Got it? So receivable ledger control account, the format is like this. You are going to make the ledger account like this and you are going to make an adjustment in that. Okay. On the other hand, the list of the balances, balance will also be given to you. You have to adjust for the errors and you will be getting the revised balance, and both of the balances must be agreeing with each other. Mariam, pata laga aapko? Receivables ledger control account और individual balances, individual receivables balances equal होने चाहिए. जो गलतियां आपने receivables ledger control account में की हैं, उनको वहां से आप ठीक करोगे, और जो गलतियां आपने individual balances में की हैं, वो आप वहां से ठीक करोगे. Ultimately, ये वाला balance, जो कि revised total agreeing with balance carried forward on control account, और ये revised balance carried forward, ये same होना चाहिए. From exam point of view, they are telling you few things. The examiner will provide the detail of the errors. They are going to tell you that these are the errors which have occurred. You must decide for each whether correction is required in the control account or the list of the balances or both. You have to establish that in which particular place you need an adjustment. Sometimes the adjustments which are needed in the list of the balances, students do them in the control accounts and vice versa. When all the errors have been corrected, the revised balance on the control account should agree to the revised total of the list of the individual balance. Due to the nature of the financial accounting exam, you will not be asked to produce full control account reconciliation. However, you may be asked for the revised balance on the control account or the list of the individual balances after 1 or 2 errors have been corrected. In your financial accounting exam, obviously, you will not be required to make total reconciliations. What they are going to tell you, they will be giving you the initial balances and they will be giving you the errors. They will be asking you the revised total balance after making the corrections. Okay, got it? What I am telling you, all this format is not going to be prepared by you in the exam. They will be giving you the opening balance, the balance before errors, and they will be giving you the total list of the errors. You are going to adjust them and they will be requiring you to calculate the revised balance after accounting for the errors. Okay, same for this also for the individual list of the balances. Now, students, we have a question. The requirement of the question is prepare the part of the payables ledger control account reflecting the above information. So what you have to do, you have to make the payables ledger control account and then prepare the statement reconciling the original total of the individual balances with the corrected balances on the control account. So first you have to make the payables ledger control account and then you have to make the statement of reconciliation as well. Students, start doing it by yourself. Make the payables ledger control account first. Yes, students, have you finished this page? Once you finish this, tell me. We will go to the next one. Done with this page? No? Why not, Hizr? Hizr, do it. Afaq? Sorry? Why are you confused? Samiha? No? What are you not getting? What are you not understanding in this? Tell me, students. Start doing it, only then you are going to understand. Individual ledger balances at 31st March have been listed out and totaled as 19,766. Individual ledger account balances. And the payables ledger control account balance at 31st March is 21,832. Are they both matching with each other? There is a difference. It means that it has to be adjusted. Upon further examination, the following errors are discovered. The errors are discovered as follows. The total of discount received for the month amounting to 1715 has not been entered in the control account, but has been entered in the individual ledger account. So in which account you are going to make adjustment? In which account are you going to make an adjustment? Control account or individual account? control account, because this is a mistake in the control account. On listing out, an individual credit balance of 205 has been incorrectly treated as debit. In which account are you going to make the adjustment? Individual accounts, not in the control account. Got it? So on both sides, write the balances and make the adjustments. Then ultimately, both the balances are going to be matching with each other. Students, make the payables ledger control account debit and credit. Write the balance as per individual accounts. Is this the pro forma which we have discussed? This is the payables account. Okay, so the normal balance would be credit. Is it? Individual ledger account balance at 31st March have been listed out in total 19,766. Above, where am I going to write this balance of 19,766? Credit side of which account? Individual ledger account balance obviously is going to be written over here. This is the credit balance and it is 19,766. Here's our next one. The payables ledger control account balance at 31st March is 21,832. Where am I going to write this? Credit side of payables ledger control account. So this one is balance carried down. Closing balance, that is 21,832. Clear up to here? Now they say upon further examination, the following errors are discovered. The total of discount received for the month amounting to 1,715 has not been entered in the control account, but has been entered in the individual ledger account. Over here, it's not a mistake, but here it is not being entered. Discount received will be mentioned on the debit side of the payable ledger control account. So discount received of how much? 1,750. Then on listing out, an individual credit balance of 205 has been incorrectly treated as debit. So what are we going to do? Where are we going to make adjustment? Individual balances. What adjustment we are going to make? Individual credit balance has been incorrectly treated as debit. We needed to credit, but we have debited it. So what, in order to correct it, what we are going to do? We are going to credit it. 2 times we are going to credit. For 1 time, it is going to cancel the previous effect. For the second time, it is going to reinstate the accounting entry. So this one is incorrectly treated as debit. So we are going to credit it for double time. 205 multiplied by 2 will be 410. Credit and credits are going to be added. Clear? So like this we have to do, students. Now the 3 are left. Start doing them by yourselves. Like this you are going to reconcile. Yes, please ask, students. No, it's okay. Please do ask me. Petty cash payment has been correctly, yes, has been, because it's been correctly treated in the control account, but no entry has been made in the supplier individual ledger account. So this is the cash payment to the supplier. So when we do make the payment to the supplier, it reduces the balance. Is it? So are we going to debit it or are we going to credit it in the payables? debited. Okay, so in the individual account, we have to make cash payment to supplier. So from credit, debit is going to be deducted. How much it is? 63. Okay, the purchase day book total for March has been undercast or understated by 2,000. Students, over here, you are going to be confused that where are we going to adjust it, because they are not telling you that in which particular account this error has been made. In exam also, whenever they are going to tell you that there is some overstatement or understatement in the day book, it will be going to be taken to purchase ledger control account. जो भी mistake आपकी day book में होती है वो foreign transfer होती है आपके control account के अंदर. Okay, so they are telling us purchase day book total for March has been undercast. It means that that error has been transferred to your control account as well, not to the individual balances. Okay, so purchase day book is being undercasted. It means that your payable ledger control account is undercast. So you are going to properly cast it. So undercast error, how much? 2,000. Please keep this thing in your mind. In exam also, they do ask you. This is again the repetitive thing. Okay, contrast with the receivable ledger amounting to 2004 has been correctly treated in the individual ledger account, but no entry has been made in the control account. So students, where are we going to adjust it? Control account. Very good. So it's contra. So on the payables ledger control account, on which side we are going to post it? Very good, on the debit side. Okay. Contra is how much? 2004. Now you have to calculate the balance. And both of these must be equal. Yes, dear. Credit where? Which, about which thing you are asking? Payables what? Yes, you are going to calculate then. On the debit side, credit balance will be written on the first. You have to total. आप total करोगे दोनों sides का जो heavier है वो दोनों तरफ लिखा जाएगा. ठीक है? फिर इसमें से इसको deduct करो और balance इधर लिखोगे. So 21832. The balance? Total 23832 minus both of these 3719 and do that as well. 3719. Are you sure this is wrong? 2011. Okay. 20113. Okay, now do that as well. Are you sure? They should be equal. No. Debit is going to be deducted 19766 plus 410. There is a mistake somewhere, students. Both of these has to be equal. Has to be equal. We have made mistakes somewhere. Equal? But I'm not getting it equal. Yes. 20113, are you getting? 19766 plus 410. Yes, 2011. So both of these has to be equal. Because after reconciliation, these have to be equal. Otherwise, there is some mistake. Yes, is everyone cleared? Mariam, are you cleared? Okay, now students, here is one more question. The requirement of the question is correct the receivables ledger control account and reconcile this to the sum total of the individual accounts in the accounts receivable ledger. The same type of the question, but in point of view regarding receivables. On one side, you are going to make the receivables ledger control account. On the other side, you are going to make the individual list of the balances regarding receivables. Start doing it, students. On one side, you are going to make the receivables ledger control account, debit and credit. On the other side, you are going to write the individual balance carried down. Okay, so it should be debit because it is regarding receivables. See the opening balances, students, or the closing balance, what they have given, and write them. $172,000 has to be written in which account? Debit. Debit and in which portion? Control. And 176,134 debit balance in the individual side. Students, here you might be making the mistakes. Please do not confuse the receivable ledger control account with the accounts receivable ledger. When they are telling accounts receivable ledger, it's individual. Only when they are using the name of the control, then it's about the control account. When they are telling only accounts receivable ledger, it's about individual accounts. When you are done with this, we are going to move to the next slide. Afaq, on which side we are going to write this 172,000? Debit side, very good. Okay, sure. 172,000 here, And Aisha, where are we going to write this 176,134? And the individual balance is debit side. 176,134. Here you can recheck your answers, okay? Okay, the following has been found. A contra item of 1,500 has not been entered in the receivables ledger control account. So Neha, where are we going to write this? Credit side of the receivables ledger control account. So contra of 1,500. Number 2, a check of 555 from customer has been dishonored. The correct double entry has been posted, but the individual account has not been updated. Hizar, where have you written this? Individual account, have you debited or you credited it? Debited, okay? The customer's checks are going to be dishonored. This is going to be debit. Dishonored checks, debit. In debit is going to be added. It is 555. A payment of 322 from the customer has been incorrectly been entered in the accounts receivable ledger as 233. Students over here, look, they are using the name of accounts receivable ledger. Quickly, what students do? Because it's the name of the ledger, they do make an adjustment here. But they are talking about the individual ledger. Only when the term of control is going to be used, then you have to make an adjustment. So they are telling the payment has been for 322 from the customer, but we have entered it as 233. It means that this is the undercasting error. So what are we going to do? Are we going to credit it or are we going to debit it? The difference. We are going to credit it. Okay. So because it has been received as 322, but we have only recorded as 233. So understatement of payment received. How much it is, students? 322 minus 233, 89. 89. So it is going to be debited or credited? Credited. So we are going to deduct it. Okay, now do the next ones. Rabia, have you done fourth one? No, not yet. Samiha, have you done fourth one? In the individual ones? Yes. Okay. Are we going to debit or credit in the individual one? Credit. With how much amount? Yes, please. Stay confident. It's okay. Very good. Double time we are going to do it because instead of crediting it, we have debited it. So in order to obviously cancel the previous effect, once we are going to make the credit, and then we have to make the correct entry for that also, we are going to credit it again. Okay. Cash received, credit, it's going to be 16. Then students, the last one, total credit sales of 4,500 to large accountancy firm. Close and counter have been posted correctly to the ledger account, but not recorded in the control account. So simply we are going to make it in the control account, credit sales on the debit side. $4,500. Students, do it. Sorry,
175.
balance
Yeah, 175,000.
100 and. Are you getting the same here as well?
Yes, sir.
Mariam, are you cleared?
Yes.
Okay, dear. Okay, now students, do this last question as well. What discrepancy remains between Tonga and Cook's records after allowing for these items? Sorry? This question what? No. Read the question, start doing it. It's not going to be done in this manner. It's different. No. Wrong. 690 is not answer. See the question again. What discrepancy remains? Discrepancy means change you can consider over here. What discrepancy remains or difference? What difference remains between Tonga and Cook's records after allowing for these items? It means that the records of the Tonga and Cook are not matching with each other. So you can simply make the records of the Tonga and Cook. Tonga received. Now Tonga has received a statement from the supplier Cook showing a balance of 14,810. This balance is shown in whose accounts? 14810. Is this Tonga's books of accounts or Cook's books of accounts? Cook's books of accounts. Okay. 14810. Is this a debit balance or is this a credit balance? Debit. Because for Cook, Tonga is receivable. Okay, that is why it's a debit balance. Samia, are you getting it? Tonga's payables ledger. Now in the books of the Tonga's payables ledger show a balance due to Cook of 10,000. So how much is Tonga books of accounts are showing? 10,000. For Tonga, Cook is payable. That is why we have to show it as a credit balance. Cash paid to Cook of 4080 has not been recorded by Cook. So who is going to account for it? Cook. Because in Cook's books of accounts it's not been recorded. And how are we going to look at it? Cash paid to Cook. Credit? Who says it's credit? Who else? You? Afaq, what about you? Don't know? Aisha, don't know? Samiha, don't know? Students, for Cook, the Tonga is receivable. So obviously when cash is going to be paid to Tonga, it is going to be credited. So cash paid to Cook of 40,080 has not been recorded by Cook. It is going to be credited. The payment of 4080. How much is the revised balance? Debit minus credit?
10,730.
10,730. This one is that. Okay. Tonga recorded the fact that $40 cash discount was not allowed by book. Now here is a confusion. Tonga recorded the fact that 40 cash discount was not allowed by book, but forgot to record it in the payables ledger. Simply what they are telling us, that there has not been any discount. Okay, so this fact has been already taken into view, but it has not been recorded in the payables ledger. So what are we going to do then?
Credit. Balance.
Are we going to debit it or credit it? Tonga's balance credit? Why?
He recorded balance.
He recorded it by mistake? It's not recorded. Tonga recorded the fact that 40 cash discount was not allowed by Cook, but forgot to record this in the payables ledger. Forgot to record in the payables ledger. The fact has been recorded. Fact means already in the statement form it might has been recorded, but not recorded in the payables ledger. So what are we going to do with that? We are going to debit. We are going to debit it. Cash discount. What is the accounting entry for cash discount, students?
It was not received.
But the fact has been recorded already. The fact has already been recorded. It means that in the books of the prime entry, it might have been done. It might have been done already. So we are going to debit it. So here the Hizar has selected the mistake. So we are going to debit 40. Now see the revised balance is 9,060. So what is still the difference? Still the difference is there? How much difference is there?
$1,673.
1670. Okay. I feel that there is a mistake in the question. Something is there. Okay. So this is one of the questions again in which we have a mistake.
The Thomas has recorded that so we get discount. Because they mentioned that before we record this in the payables ledger.
Tonga, let me just read it again. Tonga recorded the fact that 40 cash discount was not allowed by book, but forgot to record this in the payables ledger.
So he recorded the complete value.
Wait, the fact that cash discount was not allowed by the book. Okay, yes. Yes, you are right, sir. So it has not been recorded. Yes, you are very right. Okay. So it has, I was thinking that it has been recorded in the day book. In the book of the prime entry, it has already been recorded. Yes, so we are not going to record it. Okay. So this is not going to be recorded. Okay, now let's see the difference. 10,000 and
And it will be credited. 40 will be credited.
750.
no, why is it going to be credited here, sir? I'm not understanding the fact. Cash discount was not allowed by.
Yeah, but he recorded the value with discount. He has recorded the value with discount, but the discount was.
But they have not mentioned it over here. Tonga recorded the fact that the 40 cash discount.
Tonga recorded the fact that 40 cash discount was received. According to him, the discount was received, but he forgot that it wasn't.
So it means that the discount is recorded.
Yeah.
Does that mean?
Yeah.
But forgot, but they are telling, but forgot to record this in the payables ledger.
Because he recorded the discount first,
Okay.
but that discount was not allowed by.
Mhm.
So he forgot to remember that the discount was not allowed. He had already recorded the value of discount.
So he has recorded the discount.
Yeah, but he didn't know, he forgot that discount was not allowed.
Okay.
So this 40 will be credited here and we will get the balances.
Because the cash has not been, discount has not been received. So we are going to add it back. Okay, in that case. Okay. Still, I'm having a confusion regarding that. Okay. Okay, so yes, okay, we are going to credit 40. 10040.
Will you say
Credit 690. No, I'm not sure about this. Because what I feel that Tonga recorded the fact that 40 cash discount was not allowed by book, but forgot to record this in the payables ledger. No, I feel that this has to be debited. I feel still. Anyhow, I will be looking at this question once again and we are going to discuss it again. Because what I feel that, look, Tonga recorded the fact that 40 cash discount was not allowed by the book. It's been already, but I feel it's already been recorded in the day book, but forgot to record this in the payables ledger control account. Because it's been forgotten to record in the payables ledger control account, that is why it has to be debited. So in order to remove the discrepancy from the day book as well, in order to reconcile the difference regarding that book of prime entry. So here I feel a mistake in this portion, okay? Anyhow, students, this is all for today. If you do have any confusions, please do ask me. Yes, students, any confusion regarding today's lecture? No confusion. Mariam, are you clear, dear?
Yes, ma'am. Trying to get clear.
Yes, dear.
Yeah, ma'am, trying to get clear.
Okay, dear. Okay. Thank you so much, everyone. Then see you in the next week. Okay, we have not discussed anything about the test. So I will be sending you the test in the group. Okay, in the next week, we are going to have a test. Okay, students. Everyone, then take care of yourselves. Yes. Which? I am going to decide about that. Most probably F3 or F2. Most probably. Okay, dear. Okay.
Ma'am?